European share markets are tonight trading modestly weaker despite a horror day on global markets. Here, more than $50 billion was wiped from Australian shares. SBS Finance editor Ricardo Goncalves joins us now. Ricardo, China and the commodities downturn continue to spook investors.
Anton, the Australian share market certainly had a shocker today. Shares have been tracking downwards for most of the year, and while it has flirted with 5,000 for just over a month, today it well and truly closed below that level at 4,918, almost 4% weaker and a new cyclical low. With bad news coming from many angles, investors don't know where to look.
Searching for answers when all that could be seen was red.
Very broad-based and aggressive selling coming through the Asia-Pacific region today.
Japanese investors slashed 4% from the Nikkei today, following a near 2% slide on Wall Street. Ongoing Chinese growth concerns sparked the recent declines.
There was a very weak number that came from China yesterday in regards to their industrial profit.
Commodity prices fell as a result, further hurting stocks and companies already feeling the pinch. In the UK, almost 2,000 jobs will go, and a near 100-year-old steelmaking facility mothballed in the town of Redcar.
This is the best this plant has ever been. But then steel prices worldwide started collapsing.
Shares in Glencore, a global resources giant, crashed almost 30% in London. Renewed concerns about its debt levels amid lower commodity prices had traders slamming the sell button.
Certainly Glencore is making a big impact on the market. I think there's a little bit of the baby being thrown out with the bathwater.
The Australian shares of BHP Billiton were punished, hitting pre-GFC levels despite being in a better cash position than Glencore. Rio Tinto was also hit. Since this time last year, shares of both companies have lost more than 20%.
Traders speculating that we're probably likely to see further short-term falls in commodities.
Many self-managed super funds are exposed to the share market. Credit Suisse estimates they're on track to lose $40 billion over the past 6 months.
It's not just the share market which is down, but consumer confidence as well, with the novelty of a new Prime Minister starting to wear off.
The ANZ Roy Morgan Consumer Confidence Index gave up half of the strong gains it made last week following the appointment of Malcolm Turnbull as PM.
I think global consumer confidence is down, and what you've got to always remember is that confidence drives markets.
A big driver of that confidence is the US Federal Reserve, which delayed a decision to lift American interest rates.
If you want to see a bounce in these markets, it's going to be driven by a buy-side fund, a big pension fund, for example, coming out and saying that the big falls we've seen are now creating good value and that perhaps some of the pessimism is overdone.
Investors now look to Friday night's US jobs report.
Everyone's hoping those jobs numbers point to a growing US economy. Here, our share market. The banks were hit pretty hard. The big four down more than 3% each. Telstra gave up 4%. The supermarket owners off 3%. And the Australian dollar buying 69.5 US cents and is down across the other majors. Now, the next big local economic indicator will also be on Friday. Retail sales numbers for August. Sarah.